Hi, it's Arjun. Last week, we did a check-in on how the tactical questions for 2025 that we posed back in January were faring, and we gave ourselves kind of a grading, if you will, on what was on track and what was not on track. This week, we're going to go back to the big themes we highlighted for 2025 also that we originally discussed back in January. We probably should have frankly put this video out before the last one, but anyway, this is the order we're doing it. Now, there were three big themes around energy scenario normalization, a power supercycle, and how that might impact different energy sources and technologies. We're not going to kind of go through the grading this time. We want to look through how those three themes are interplaying, and how they're progressing through the course of this year from the perspective or the lenses of what we talk about in Super-Spiked: macro framework, policy outlook, as well as corporate or corporate strategy, or maybe how investors interpret the world. I'm going to do it with the sort of the perspective of what's in and what's out, and let's see how this goes. So we had three big themes that we highlighted for 2025. The first was energy scenario normalization, this idea that the world was going to move away from where it was over the last 4 years, which was prioritizing CO2 and solving for CO2 is somehow the primary objective through kind of, quote, the energy transition and net zero narratives, none of which we thought made sense. And that the idea that you could go very quickly out of fossil fuels only into renewables over some arbitrarily short time frame. You all know we never believed in any of that. Our view is that we are getting back to respecting energy's natural hierarchy of needs, that reliability and availability is the first, last, and only thing anyone actually cares about. Then you ideally want it to be affordable. And then at the country level, you care about geopolitical security, really to ensure reliability, availability, and affordability are intact for your citizens. And it's only after you satisfy those objectives that you start contemplating things like the environment and perhaps even climate considerations. And it's not to say the environment doesn't matter, it absolutely matters. But I think you have to get the order of operations correct when analyzing and evaluating and coming up with policies for energy. And all anyone anywhere cares about is, do I have energy today? And then again, hopefully I don't have to pay a lot for it. Our second big theme was the power supercycle, what we call power surge. I think because of my sort of oil background, if you will, people always ask, when are we going to have our next oil supercycle? And our view, as you know, has been oil is super vol, not in a supercycle mode. We continue to think oil will have good days ahead of it. We think demand continues to grow, and at some point we could have another supercycle, even if that day is not today. But I think there's very little question that power we would call this generation super cycle, very similar to what in the BRICS were to oil 20 years ago. And that's not just a US thing, it is a global thing. It's not just AI, it's grid modernization. And after a long period of flattish demand in the OECD, renewed growth rates and so forth. So I think power remains a very big theme, and that is certainly coming through. And then as a result of both, I'm going to say, scenario normalization, a better understanding of what is going to drive energy, as well as this sort of power theme, the winner energy sources and technologies were going to be different than what people would have thought under that previous environment of kind of, quote, the energy transition. Obviously, natural gas and nuclear fall into the winner category today, increasingly recognized versus greater skepticism a few years ago. And we'll spend some time going through that as well. So as I mentioned, I want to look through this not in terms of how right or wrong we were in any of these themes. I think all three of these themes are coming true, but to really put it in the perspective of, first, what does this mean for macro frameworks? Our next slide will be, what does this mean for policy? And then lastly, what does it mean for corporations, corporate strategy, and investors, and so forth? I'm going to do it a little bit of a sort of what's in and what's out type style here. Let's see how this goes. So I'm going to say net zero and the energy transition are out, and energy policies that will drive GDP growth to help meet energy's natural hierarchy of needs, i.e. reliability and availability first and foremost, those are in. And maybe just a quick comment on the net zero and energy transition point. We expected this evolution to happen regardless of who won the US presidency. I think for especially the Americans and maybe Europeans that are listening to this, there will be some idea that, well, because President Trump won, those other terms are now out. And I don't think that's the case. We were moving in this direction regardless. Perhaps the Trump administration has merely accelerated this transition. I have to say that even I've taken aback by, you almost hear no companies at this point talk about net zero. I never thought it made sense as an individual corporate objective. I don't think it's coming back. And I think you all know Super-Spiked was founded on the idea that the energy transition, that whole narrative never made sense. And this is sort of our protest or pushback on those very points. I think, again, I think the world is coming in our direction. What is in? The idea that everyone on Earth should someday be energy rich. That is in. The idea that some group and potentially a very large group of people are going to choose to stay poor, that mindset is definitively out. And even if people didn't phrase it that way, I'm not sure what you conclude from any of those previous net zero scenarios. You're going to leave a whole bunch of the world poor or very poor based on those types of prior net zero type outlooks. I will say this about everyone on Earth someday becoming energy rich. I don't understand, I've never understood how that's not the obvious goal. Why should only those of us in the lucky 1 billion get to enjoy the kind of lifestyles we take for granted? And what makes anyone think everyone else on Earth isn't going to aspire to that? We know the 4+ billion people in Asia are on various tracks to improve their economic health and outlook, and with it comes more energy use. And I think for the first time in my 33-year career, maybe, just maybe, we're starting to see some green shoots in Africa. And I'll talk a little bit more about Africa, the 54 countries in a moment. Our third point here, OPEC research is in, energy macro agencies and some of the larger companies that were especially obsessed with net zero ideology are out, at least for now. Everyone has an opportunity to change their views. I said this last week, I've said it many times before. Throughout my career, I've had calls that simply did not work out, where we were wrong. We tried our best to apologize, figure out what we got wrong, and then do a better job going forward. I think we'll see if we get all of that from some of these macro agencies and major oils that, again, really succumb to the net zero ideology. But needless to say, I think you will see evolution in the years ahead, in the year and years ahead. I think in the case of OPEC research, despite perhaps having a branding issue, I think they've sort of been the most right in terms of how they viewed the energy outlook in terms of focusing on increasing economic and energy wealth. And of course, the OPEC research view has been very much aligned with how we view the world. I think as a final point on this section, I just want to kind of talk about what to watch, certainly over the rest of 2025 and perhaps going into 2026. And I think there are two energy outlooks we are most closely watching to see what, if any, kind of evolution occurs. And the first is the BP energy outlook, which I believe is scheduled to come out in September 2025. I think you know at Super-Spiked, we have a self-imposed policy to not talk about current companies or their contemporary strategies. I just don't think that's appropriate in these sort of for the public type videos. But I will say this, I think it's broadly understood and widely reported that of the larger oil companies, BP under its prior CEO went most in the direction of sort of a net zero type focus for the company. And that was very consistent with the energy outlook that their economics group produced. And I think it will be interesting to see what, if any, kind of evolution we had in the one that's going to be released in this September. I said this, I think, a couple of weeks ago when I talked about the OPEC World Oil Outlook Report. I think for these types of analyses, whether it's BPs or the IEAs that are not consistent with how I view the world, I think it's important to continue to emphasize, I believe these other people at BP, at the IEA, have made these forecasts in good faith. I've had the good fortune to interact with many of these people firsthand, and certainly the BP economics department, they're actually a joy to interact with. I have always enjoyed the one-on-one meetings I've had with them, not just with the current team, but with some of their prior chief economists as well. It's always been an outstanding group. You don't have to agree with every last assumption to respect, I think, their view of the world and how they approach things, even as I think their view ought to change going forward. And a similar type perspective with the IEA. My big issue with most of those net zero outlooks was not the inclusion of a net zero scenario in its own right, but all the iterations from the, I think they call it current policies or base case type scenarios, were only net zero iterations. How does that make any sense? You have a sort of current policies. How do you not have one that has better or more broad-based economic growth? Maybe there's an environmental scenario, but maybe there are different versions of downside scenarios or different paths for which technology might get developed and so forth. I mean, the idea that you had sort of a current policies and only various net zero iterations, to me, is the big issue with some of these outlooks. I'm highlighting BP and the IEA here. They are not alone. Other large companies in the oil sector had similar type outlooks, as did other people as well. But I do think BP in September, the IEA's World Energy Outlook, WEO in October, they're going to be interesting to watch to see the evolution if we have one. We're starting to do a lot of work, me and my team, on Africa, and to really try to dive into their total addressable market. And I can say that in my 33-year career covering the energy sector, I've spent very little time trying to understand energy demand within African countries. It just simply hasn't mattered to anything we've done. Sometimes the supply has mattered, Angola, Nigeria, Algeria, Libya. Sometimes the supply has mattered, but I don't think anyone has really spent any time looking at demand. And, in a world where the rich world, the lucky 1 billion of us, use 13 barrels of oil per person per year on average, the most efficient is Europe at 10, we're at 20, Canada's 20 plus, South Korea's over 20, Thailand 6.5, China's 4. Africa overall uses just 1.1 barrels of oil per person on average. And when you actually disaggregate it to individual countries, even a lot of that demand is in the ones that actually produce oil. So that would be the larger oil producers within Africa. If you go to non-oil producing countries within Africa, they're using paltry amounts of energy. It's actually quite shocking that if any of them are able to move the needle at all, you're talking large increments to energy demand overall. And I think oil and a bunch of other things will be a big beneficiary of that. So we can debate whether that's going to happen. It's 1.4 billion people today, going to 2.4 billion people. And I think it is worth understanding this because it's going to be a huge driver. Everyone spends a lot of time on India, well-deserved. I do too. A lot of time on rest of Southeast Asia and China, understood, well-deserved. There are a heck of a lot of people in Africa, and I think they deserve more than going from 0 to just 3 light bulbs or something like that. And there's a lot of their oil demand. If they got to 10 barrels per person in Africa, some decade or century, 60 million barrels a day of oil potential. So you darn well better understand what the timing and likelihood of that path is. So let me switch now to the policy implications of these 3 themes that we're talking about. And we'll stick with the what's in and what's out. Energy policy that drives long-term affordability, reliability, and security, those kind of policies are in. Policies that sort of start and end with counting CO2, those are out. And on a related point, the IRA is out and AI demand is in. And let me spend another second on the IRA, which I talked about last week. And let me first start with what I'm going to say are some of the positives or the aspects of it that I think I agree with. The first is that I believe the United States should not just look to be dominant in oil and natural gas, and we can throw coal in there if we want, but that we should look to ramp up, develop, take a lead, and become dominant in new energy technologies. I support that as a primary goal, and that was one of the objectives of the IRA. And I also support what I think is now a bipartisan consensus that we should be looking to reshore some amount of manufacturing into this country. And certainly there are aspects of various critical minerals and other metals in mining, both the mining of it, the processing of it, some portion of that. We probably shouldn't be solely dependent on other countries. So exactly what and how much should be reshored, we can certainly all have reasonable debates on. Where I push back on the IRA is really that it was primarily done in the name of carbon and climate change. And I think the proponents would say that. This is climate policy. And I think that's where, to me, the IRA went wrong. To me, you're not going to ramp up new energy technologies if the goal is carbon abatement. One might choose to have carbon abatement policies, but in terms of energy macro developments, in terms of stimulating major new sources of supply or new technologies, they're going to be driven by, do you get reliability and availability improved? Is it going to be affordable? And what's the time frame for ramping on it? And one of the things that I will say, we try our hardest to not be partisan in this. But when I listen to, I'm going to say left of center or climate-oriented podcasts, or just those people who are more passionate about the climate question, they'll often say the voters who voted for President Trump voted against their interests because it kills things like the IRA, with a lot of the funds being spent in red districts. And I'm going to respectfully push back hard on that narrative, that somehow voters are going against their natural interests if they somehow voted for President Trump and therefore didn't support the IRA. The IRA is something that was promoting a climate agenda was not going to be successful in what it tried to pursue, which is why we never took it as seriously. Again, there are elements of it that we do support. There are larger portions of it that we do not. I never thought it was going to make as much of a difference as the proponents, the climate-oriented people, said it was going to make. Some of the above is in. All of the above, I think, was never actually in. So let me now push back on maybe some of those in the oil and gas sector or proponents of oil and gas who will say, I'm an all of the above person. President Obama was all of the above. He was right about that. If he was right about one thing, he was right about that. In my experience, no one anywhere is truly all of the above. Everyone's got their 2, 3, or 4 things they prefer, and their 1, 2, or 3 things that they don't like. And it actually makes sense. We don't need all of the above in every single country or region. A great example is solar. I think solar makes sense in a country like India, where you get a lot of solar radiation, solar plus batteries I'm talking about. You don't have a lot of oil. You don't really have a lot of natural gas in India. So it makes sense for coal plus solar and batteries to be some decent portion, whatever the percentages are, of their future grid and electricity generation. By the same token, I don't think solar makes as much sense in Germany, would be my guess. And so some of the above by region, I think, is the path forward. It's the practical path that countries are actually taking. And I don't believe anyone is actually for all of the above. So we probably need to retire that phrase. Our final policy point is that regions that are long energy resource, and by here I actually mean oil and gas, they should all be in. But some are not sufficiently in, and some are still kind of out, and it doesn't really make sense. And my examples of countries that are oil and gas long, the best example is Canada. I don't understand why they're not all in on developing what is, they've got great labor laws, they've got great environmental laws, they are a friendly, great country, Canada. They ought to be maximizing, in my opinion, their oil and gas potential. And the rhetoric's improved there. I will say, when the current Prime Minister Carney, used to be the guy spearheading the Glasgow Financial Alliance for Net Zero, which I have a huge aversion to, and we did a bunch of videos and written posts anti-GFANs. I mean, they were trying to basically kill oil and gas financing, which to me, and by the way, in places like Canada and the United States, never made sense. Now that leader is not a leader of Canada, but people change, circumstances change. I'm going to hold out hope that Canada will go all in on their oil and gas development. And I think in the case of California, we're not expecting California to go all in on oil and gas, but they could certainly go from being outright hostile to at least a little less hostile. And there is some talk of that, and we shall see. In terms of what to watch in the policy space, I think we're going to watch most closely U.S. natural gas midstream infrastructure. What is the scope of it getting developed, especially in areas that you would call maybe anti-natural gas? So will we see natural gas infrastructure expand to the U.S. Northeast as an example? And how do we ensure we have the crisscross of pipelines and storage and other infrastructure to ensure our gas can get from where it is to either LNG or other industrial markets where it's going to be needed? Canada, I just mentioned, we're going to be watching closely for developments on their oil and natural gas and LNG infrastructure. And I do hope they will become as all in as we are. I mean, how is it that the US could go from essentially zero LNG exports in 2015 to by 2023 being larger than Australia and Qatar, to be #1 in LNG exports? Canada has as much, if not more, basically stranded, no local market is what stranded means, natural gas, that all could go to LNG markets. And frankly, the west coast of Canada is pretty darn close to Asia. So we'll see. They've got an LNG project now. I think there's a lot of scope for Canada to do a lot better. And I think the last area we're watching is, will reliability and affordability reforms in places like California and Western Europe win the day over what had been sort of a climate-only type ideology that has dominated for the last little bit of time? We shall see. The last area I want to go through are just some of the corporate strategy and maybe for some folks, investor implications of these 3 themes. And first is pretty straightforward in that companies exposed to the power value chain are in. That includes natural gas is in, nuclear is in, and the oil value chain is still out. We've said it many times. I'm going to say it again. We do think there are still some good days ahead for oil markets, but it's not competing, at least at the moment, from a corporate standpoint, with the obvious need for more power generation, all these kind of things. And so you got a power super cycle. We're still waiting for better days in the oil sector. So at least at the moment, it is still out. Solar and batteries are still in. Wind is out. Now I'm gonna address this comment to, I think where I got feedback previously when I've talked positive about solar batteries, I got a decent amount of pushback from some element of our Super-Spiked readership or viewership. And I'll just say this. In the same way that a lot of folks who are positive on oil and gas, or at least not negative, will say, I didn't like all the vitriolic language and all the anti-oil and gas rhetoric that came from Democrats or the prior administration, whatever. I didn't like all that. No one needs to be doing the opposite to, frankly, any element of the renewables value chain, including solar and wind. It looks like the subsidies are going away as they should have been. We're going to compete on even grounds. I will still hold that I think we're going to see a lot of solar and batteries going forward. Would we have had more or less in the US if we still had subsidies? Who the heck knows? But for large parts of the developing world, and especially if there are areas that are short crude oil and natural gas, and I've already mentioned India, I think solar and batteries are still going to be in a major way. We'll look at the real economics. All energy sources, whether it's oil, natural gas, nuclear, solar, batteries, et cetera, they all have pros and cons. I can't put a nuclear plant on the roof of my house. I could put solar panels. Now, maybe that's not for everyone. I live in an affluent area. I know I'm lucky. I've said that many times. So it's not for everybody, but it is for some areas, and I think it's got a role to play. Amongst the big ticket, long lead time items that people love to spend time on, I'm going to say nuclear is in and green hydrogen is out. And geothermal is hoping to be in. We'll do some more work there. On the green hydrogen point, I never ever thought that that was ever going to work. It was a climate, quote, a climate solution. So strike number one, that's not going to be the driver of anything. The idea that you're going to use only solar and wind to then turn that intermittent energy into something like hydrogen like, what part of green hydrogen ever made sense, at least at a mass scale? Maybe there's some niche applications that I haven't thought of. It was never in, definitely out. I feel like even like Europeans recognize green hydrogen is kind of ridiculous. So I'm going to say green hydrogen is out. There's a lot of work to be done on nuclear. The affordability points of questions. So how do you make it affordable? Clearly, it has good on reliability, availability, and geopolitical security. So again, all energy sources have positives and negatives. We're going to say nuclear in, green hydrogen is still out. I want to focus for a second on some of the smaller companies. IPPs are in. They frankly are doing as well as a lot of tech companies. Trio of IPPs have kind of kept pace with NVIDIA over the last couple of years. And Smid Oil value chain, which are both E&Ps and oil field service names, they have been out. But I'm going to spend a second on this Smid Oil because I think it's a really interesting space. I've previously mentioned the quartet, I think maybe they're up to 5 now, of mid-cap oil service names who are starting to look at the power sector and seem to be getting to varying degrees rewarded for some of their efforts there. And the first observation would be, it seems like the benefit of being an oil field service company is the market is more tolerant of your trying different things. Like if you're an E&P company and you're in one basin, people get really mad when you go to a different basin. Never mind if you try to do something crazy like go international or explore or what have you, all of which I think are viable strategies, but the market doesn't like it. In the case of oil services, you seem to be able to try different things. And so the ability to pivot, the ability to add different business strategies, I think it's at least worth examining who amongst that group do you trust the management team and where you like, whether it's a power pivot or an industrials pivot, who do you like in that space? It's an interesting sector to look at. On the Smid E&Ps, as best as I can tell, and I'm not a current Wall Street analyst, so you bear with me here. These things are trading like 3 times EBITDA using like a $60 to $65 consensus oil price. And someone can check me on that if I'm off a little bit. But a cheap valuation on what is not a crazy. It's not like they're at 3 times cash flow on a $100 oil price. We're talking 3 times cash flow on what is in the, at worst a mid-cycle price, it may actually be the lower end of the range. These companies have questions about inventory life. Some of them are single basin them, but some of them are not. My point would simply be, go through that list. Same sort of thing. Who do you trust? Who do you not trust? Who can maybe extend their inventory life by another year or another 2 years? What M&A makes sense? Who might already be multi-basin and might have some running room in a different basin than whatever everyone's been focused on? There is it is worthy of more differentiation than everyone getting lumped at 3 times cash flow. Is there private capital opportunity to take a different route with some of these companies? Can any of them be the blowdown story that some people have always dreamed some E&P should try? Yeah, you know, going deep on an individual company is not the purpose of Super-Spiked. I find this Smid Oil value chain to be deeply interesting right now, and there clearly are deep value names. We can debate the timing. None of this is an investment recommendation. I would argue it's worth doing the work and understanding it is the point we're trying to make. 2 final corporate areas. The first is companies driving new technology development in regions that are energy resource short, and that, I mean, they don't have enough oil and gas. Those companies are in. Here, my examples would be BYD and Xiaomi in China. They lack a lot of crude oil in China. They were freaked out about where their oil imports had already reached before becoming a rich country. They've merely gone from poor to kind of middle income at the country level. And you have things like BYD and Xiaomi. I honestly would love to try driving one of those cars. I think if they were sold here, they would achieve some decent portion of market share. EVs are not for everybody, but when you produce cheap EVs, and you could do a separate video on how they got there and all that kind of stuff with China. But you have, again, companies that are helping solve a critical issue for their country, which is they don't want to keep importing a whole bunch of crude oil. How do you avoid that? You have companies like BYD and Xiaomi come about, and so good for them for that. On the flip side, companies that exist to merely exploit rich world government subsidies, tax handouts, tax credits, in the name of CO2 accounting, i.e. the IRA and what we saw over the last 4 years, those companies are out. Now you could say, wealthy people pay a disproportionate amount of taxes, taking those taxes and giving them to a different group of private equity and venture capital companies to kind of harvest these tax credits via all these, quote, clean energy schemes. Who cares? But I'm going to say, from a logic standpoint, from a policy standpoint, I never thought that made sense. Maybe I'm being too sarcastic, and I apologize for that. But this idea that you're just going to harvest tax credits that come from the American taxpayer, not business models that I find particularly exciting. And let me offer some critique to the oil industry, and it's not just their fault, but things like renewable diesel. Are we sure renewable diesel is good for the environment? I feel like I'm hearing from environmentally oriented people starting to question the environmental value of things like renewable diesel. That is, perhaps they were forced to do this, perhaps the incentives were there, but simply that when your input cost for renewable diesel is more than your selling price of the diesel itself, and you're reliant on this low LCFS tax credit to make the economics work, how is that okay? How is that good policy? Especially if there's no environmental benefit. What is the point? Just do regular diesel. Just do regular diesel. Why are we doing crazy diesel? And the same thing's going to be true for sustainable aviation fuel, is it not? It can't be that environmentalists are starting to question the environmental efficacy of some of these things. So anyway, sorry, let me stop. I think you get the point. The companies that exist to simply exploit tax credit harvesting are out. So I'll end this video on a personal note, and we're going to stick with the theme of what's in and what's out on a personal basis. Our golf game was out. You've heard me lament. We had a very rainy start to the golf season through much of summer in the US Northeast. Been helping my parents with their moves and health challenges and so forth, and I had some other travel, and the golf game was suffering. But since we went to Scotland for graduation, Scotland always jumpstarts my golf game. Usually I go in May. This time I didn't go till sort of the July 4th graduation week, but it's turned around the golf game. The weather's improved here. We're doing well in that President's Cups tournament. The golf game, we're going to say, is back in. Living with my parents is out, but that is because they have moved in to their own apartment or condo in a senior living community. It's independent living, but within a senior living community, a nice 10 minutes away. And I'll just say a couple things. I last lived with my parents, I think when I was 19, the year after my freshman year of college. That's actually another on a personal video that we'll come back to in a future point in time. But I'm 56 now, so it's been a long time, and it definitely is different living with your parents, probably as a child, but certainly as a parent. When 40 years or whatever that time is, 37 years have passed. But It's been great having them here. My father's was with us since mid-May, my mother since mid-June, and they've just moved in this past week into their own place about 10 minutes away. It is awesome having them nearby rather than 6+ hours away. We're looking forward to seeing them not just on Thanksgiving and Christmas and major holidays, but on a much more regular basis. But hey, you know what? I think them living in their own place with other seniors where they're, paramedics and EMTs nearby, definitely healthier than living in our house itself. And so living with the parents out, but having them nearby and happy and healthy, very much in. Sadly, as I noted last week, Ozzy is out. May he rest in peace. Dark Star Orchestra is going to be in. So I'm mostly a metal guy. As you know, I do like increasingly, or I should say in the last decade, I've come to appreciate classic country. But I've also sometime after high school became a bit of a Grateful Dead fan. Not a Deadhead, we're not going to say that. But this is a Grateful Dead cover band. They're playing in New York in a couple weeks, and we'll be going to that show. So at least here in the month of August, we're going to say Ozzy's out, rest in peace. The Dark Star Orchestra and the Grateful Dead are in. Thank you.